Hi there, welcome to kneppyinvests. In this video, I'm going to be talking about a company called youfoodz, a recent IPO on the ASX. So we don't have much financial data to look at. They have released the half yearly in February and two Appendix 4Cs. And in this video, I'll be looking at the most recent Appendix 4C, which was released on April the 23rd. Now, if you don't know what youfoodz do, they are the sort of company that really did benefit from COVID-19 and the lockdown because they are very similar to Marley Spoon and HelloFresh, but even though they are similar, they're quite different because Marley Spoon and HelloFresh deliver ingredients to their customers and the customers actually have to make the meals themselves. youfoodz have just gone that extra step and have actually made the meals and then deliver the ready-made meals to their customers, and their customers just heat it up and then eat it. Also like the fact they are diversified, so they have the home delivery service of their meals. They also have placed their meals into supermarkets. That's their wholesale area or division. And so I do like that diversification, which makes them a little bit different from their competitors on both sides. So a little bit different from Marley Spoon and HelloFresh, and a little bit different from all the rest of the frozen meal product manufacturers, or whatever you call them. So before we get into the Appendix 4C, I'm just going to take a quick look at some of the facts around this company. youfoodz did IPO on the ASX around December 8 or 9 in 2020. So they've only been on the ASX for about 4 or 5 months. So we don't have much financial data, unfortunately. I would like to have a little bit more. I would love to have 2 years of data to really analyze a company. Anyway, ticker code YFZ. Now, some of the things that make me interested in this company are some of their financials. So market cap of only $81 million. And when you look at the revenue for the half year, so they did release their half year report in February, $100 million in that half year. And that revenue number is going up. So we can look at the previous financial year reports from the company. They do release that in the prospectus, and on the day they listed or debuted on the ASX, they released at least 2 or 3 of their financial year reports. Now, the operating cash flow for the half year, that's really a number you've got to ignore because even though it's minus 24.2 million, 22 million of that was tax considerations, which was a one-off. So in real terms, it's really minus 2. And if you do want more information on youfoodz, they released their Appendix 4C on the 23rd of April. A lot of information in that report. So if you are interested, if you are keen, I do fully recommend, highly recommend reading Appendix 4Cs. When a company releases their Appendix 4C, the first thing I go to is the cash flows from operating activities. I like to see numbers. I skip all of the activities report for the company over the last quarter or so, and I go straight to the numbers because the numbers will tell you enough. And there are 2 numbers when I'm looking at the cash flows from operating activities that I focus on. First number is receipts from customers. I always have a bit of an idea in regards to what I expect receipts from customers will be for every single company that releases an Appendix 4C. With youfoodz, that number was around 40 million or so. Anything significantly less than that, say 35 million, that would be a disappointment. Anything over 45 million would be complete opposite of a disappointment. It would be an exciting. So for youfoodz, their receipts from customers for the quarter was 37.9 million. So a little bit lower than my expectations, but not on the disappointing end. But it was lower than the previous quarter, and you will see that in the next slide. Now, the most important thing when I look at the cash flows from operating activities, because the receipts from customers in isolation means nothing. You need to know a bit of a trend there. But the most important thing is whether the company is operational cash flow positive or negative. And that is found right at the bottom of the cash flows from operating activities. And for youfoodz, they were operational cash flow negative by 2.5 million. Now, in saying all that, probably the most exciting thing about youfoodz was their cash on hand at the end of the quarter. So the market cap of the company was in the 80 million range, and that means the enterprise value with cash on hand of 32.5 million and about $2 million of debt is, the enterprise value is about 50 million. So that's quite attractive when you consider they do have growing revenues of $100 million. They have been EBITDA positive. They have been operational cash flow positive as well, even though negative this quarter. They have been positive. So I think this company is looking quite attractive at these prices. But there is one thing, a major thing holding me back from buying in. One thing I really like to look at is looking at the cash receipts history or trend of a company over time. And typically I like to look at least 2 years of data. Now, youfoodz only IPO'd in December 2020, so instead of 2 years of data, we've got 2 quarters of data. And when you have 2 quarters of data, you can't see any real trends, a very small sample size here. So even though we did see a decrease in cash receipts over the last quarter or 2 quarters, that does not equal trend. We don't know what's going to happen in the future. The next 2 quarters could be significantly higher than this last quarter. In fact, we don't even know if youfoodz is affected by seasons. Maybe this is expected. Maybe having lower cash receipts during the most recent quarter is to expectations. And I can see possibilities of why that might be, simply because the last quarter included Christmas, and there is a possibility that people would prefer to use or order ready-made meals during the Christmas holidays, so they don't want to make their own meals, just order some meals from youfoodz, that sort of thing, because we're quite lazy during the summer periods. And maybe those same people are more likely to make their own meals, go to the supermarket, buy their own ingredients during the April quarter. So we don't know, and that's why I like to see 2 years of data. The most feared word as a shareholder of a company is downgrade. And you never want to hear, see, or read that word in any report that the company releases. And unfortunately for youfoodz and their shareholders, this is exactly what happened in their Appendix 4C. They did have a downgrade in there. And this is the reason, probably the main reason, why the share price for youfoodz was hammered by the market. The market hates downgrades. It's the one thing it really, really hates. And this is the reason why share price of youfoodz fell 15% on the day they released their Appendix 4C. So they have revised net revenue for the financial year and EBITDA as well. And those numbers have gone down for net revenue only a little bit, from 149.9 to a range of 146 to 148. But EBITDA has been revised from 2.9 million to a range of 1 to 2 million. So as soon as I saw that downgrade, I knew immediately that was a reason why the share price of youfoodz was absolutely hammered. And here is the daily chart for youfoodz ever since they IPO'd in early December 2020. On the day they entered the ASX, the share price actually ranged from about $1.05 to $1.32 or 33. So a very large range there on fairly significant volume as well. And it's fair to say the share price has been dropping ever since then, particularly from that secondary high in late January. A well-defined downtrend has formed, and in fact the share price almost halved from $1.20 to 60 cents in just over 1 month. Not something you want to see as a shareholder of a company. Now, one of the other really interesting things about the share price of youfoodz is there is potential support at 60 cents. It hit it once in early March, then again in late March, early April. And both times it hit 60 cents, it bounced off it. And right now, you can see the end price of youfoodz at the close of trading on Friday, April 23rd, was 60 cents. So very important to see what happens or how the market moves youfoodz over the next few trading days. If we fall below 60 cents and remains below 60 cents for a few days, I think that support will become resistance and that downtrend will be intact. The share price did fall 15% on this day. They released their Appendix 4C. But I do believe the valuations of youfoodz is becoming more and more attractive the further share price falls back, particularly because of the amount of cash they have on hand. Net cash of $30 million with a market cap of $80 million is attractive to me. So this could become a very interesting value play over the next few months, particularly if the share price keeps falling. I do think right now it does or will pay to remain patient. There's no point buying in just because the share price has been lower or is lower than it has been over the past few months. It can still go lower. I'd like to see some confirmation of a new uptrend forming, or 60 cents holds as a good support level. So there is a possibility that 60 cents could be a low risk buy because it is support. And if it falls below 60 cents, well, that's a sell. You've lost a few cents if you do sell. But if it keeps rising, then you've maybe bought in at a good price. So that's just my opinion right now. I've put youfoodz onto my watch list to follow closely just to see what happens with the share price over the next few trading days. And if I do see a little bit of a bounce, that could be a good time to buy in. That's all I've got for this quick take Appendix 4C for youfoodz. If you are a shareholder or a customer of this company, I'd love to hear from you. I'd love to hear your opinions on how this company is doing. If you love their products, you love to eat their food, I'd love to hear from you. So leave a comment if that is you. Otherwise, I'm not a financial advisor, so if you do need to seek financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. See you later. Bye.